The New Zealand versus US dollar continues its move to the upside today. Lower US dollar after the weaker than expected ADP report and the US government shutdown, which has Washington and all the government workers in a state of flux and not working and furloughed. We're still waiting for construction spending to come out, which was expected at 10 a.m. It is now 10:32. In this video, I'll talk about the tacticals that are driving this currency pair after the rise over the last 3 trading days and what we can expect going forward. So let's get started. Recall from last week, the low price fell below this swing area. The swing area is defined by these different swing highs through here and here. We broke above that level, failed, and rotated back to the downside, and then broke higher. We didn't return to that area until last week, but at the end of last week when the price fell below the low of the swing area between 0.57599 and 0.5771. That led to a rally into the weekend, and in trading this week, we've seen a move to the upside with the ADP report and all the other stuff coming out of Washington leading to the move higher. Now that move to the upside has now found resistance sellers against the 0.5830 level. I had a horizontal line there. Why? Well, if you look back in time and you take a look at this low right here, and then you look at this low right here and this low right here, and then the break below the level and the correction that came up to that old level and found willing sellers, that set the level as a level. Why you put that horizontal line there? Because you just want to pay attention to it. You're paying attention to the details in your trading, and you want in this case it was a target that you need to get to and through. Now, the price hasn't been able to get through that level. Buyers maybe down here, but selling against that level. Why do they sell against that level? Because they can put a stop if the price breaks back above it and get back in if they wanted to, or get out of the sell. Alternatively, if the price does move lower and we come back down toward the 50% retracement, they have another decision to make. Do they want to buy near that 50% level, near that 0.5800 level, or do they want to hope that the price moves below that level? That's what traders do, is they look for those low risk trading opportunities, and that was a low risk trading opportunity against the 0.5830 level. Now we're currently trading at 0.5820, so we're about 10 pips into this corrective move, and the question comes, can we get down to that 50% retracement? In which case, look for potential support buyers against that level. Not only 50% is there, but this low price right here also corresponds with that level. Does the price rotate back to the upside, get above the 30 level, in which case we look toward this cluster of moving averages and swing area. I'll just outline the moving averages through here. The 200-day moving average, 100 and 200 bar moving average on the 4-hour chart, all moving back to the downside. We also have this swing area, swing up here, which comes in at 0.5845 or 0.5860. So that's the look of the New Zealand versus US dollar so far, holding resistance against where we should hold resistance, near the 0.5830 level. If the price can get below 50, it's more bearish. If the price moves above the 30 level, keep the momentum going to the upside on this move higher this week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.